Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at Harmony One. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that. It's going to be in the top right hand corner of your screen. Also, I have two donation links down below in the description. If you want to support Ukraine, feel free to do so. Of course, if you are able to. We need the support right now more than ever. So thank you all for watching. Thank you all for sticking with the channel. Let's jump into the technical analysis. So we got the dump that I was expecting with the FOMC meeting and the Fed increasing the interest rates by 75 basis points. And as you can see, we got the dump. I was warning you guys about this in August. I was talking about the Ethereum merge. I was talking about the CPI data or the inflation data, and I was talking about the FOMC meeting. All of those events turned out to be negative as I was predicting. I'm not saying I'm some sort of a wizard here. I just, applied my logic to the charts and I was waiting for these buying opportunities. Now, granted, for some reason, my credit card got blocked and I can't use either of my cards at the moment. So it really is a bit annoying that I can't buy into the markets right now, but I'll be doing that in a couple of days. In the meantime, you have the opportunity to dollar cost average into Harmony One. We are holding the support of the yellow trend line that I gave you a couple of weeks ago. We've been taking a look at it ever since. And as you can see, we came back down and we landed precisely on that trend line. We're already up 4% from there, but I do think there's a possibility that we're going to lose this if Bitcoin continues to drop down. Now, the key support area here to hold is the bottom that we printed in July at 0.01704 cents. If we start losing that, that is going to be negative news for Harmony One. So if I throw down a Fibonacci retracement here, from that high to the swing low over here. For those of you who are not familiar with the Fib, watch my video on how to use the Fibonacci retracement. It's going to be on the channel page in the technical analysis playlist. So we use this swing high and this swing low, and we get our 1.618 target approximately closer to 1 cent. And we obviously have the 1.618 target from the larger Fib. So if I just zoom out to show you how I set up the larger Fib. So let me get the arrow. This is our swing low that we printed in June of 2021 and the high that we printed in October of 2021 and the double bottom pattern that we created in January. So those are two identical highs. From those highs to that low, we get the 1.618 over here at 0.01295. So we haven't retested that level yet, okay? It is possible we can come all the way down to the 1.618. That's another hefty 30% pullback. So if you're looking to enter Harmony One and you have spare cash, I would advise, well, I'm not a financial advisor, but if I was entering Harmony One, I would set up buy limit orders throughout this area here just to pick up the potential capitulation that we may get, because usually after those capitulations, you tend to see quick recoveries. So if you're looking for a short or mid-term trade, this is a golden opportunity for you. But even without us coming back down to these levels, right now, this is a great buying opportunity because this is as low as we've been almost since July, and we're coming back down to this low. So as a lot of charts are doing this, or a lot of altcoins, is we're printing the low in the summer, we're starting a retracement to the upside, and we're coming back down to where we came from. So this is something to keep in mind. And I don't know how long we're going to be doing this. Hopefully longer than most people expect, because I want to buy into my altcoins and I want to do that at cheaper prices. Also, what I've noticed is that we are in this falling wedge pattern here, a perfect falling wedge pattern that we're going to be targeting, and the price or the technical target from that is going to be at 0.03381, and that is because that is exactly where the pattern was created, as you can see here. So yeah, in these falling wedge patterns, we tend to break to the upside impulsively, and especially for breaking a multi-week diagonal resistance trend line, I would expect some sort of a break to the upside. That is if Bitcoin allows us to do that, because we're just hovering above the support if we start losing this and we start backtesting the yellow trend lines as resistance, that is going to be quite negative. And at that point, I would be expecting a move to the 1.618 of the large fib. However, that hasn't happened yet, so I cannot tell you that I'm expecting that. However, you always have to keep in mind that Bitcoin does whatever it wants really at any time. And obviously there are ties with the S&P 500 and with the financial markets and with the news coming out. So just try to stay aware of everything happening and everything surrounding the crypto markets, because if I wasn't doing that, let's say, then I wouldn't know that we might get a nice dip today. And that's exactly what I was warning you guys about. So good area to dollar cost average in right now. If we go lower, just buy some more at these support levels at 0.01704, and never buy all in. As always, not a financial advice, but the price can always go lower. So you always want to have some spare cash to buy into your favorite altcoins. So that's regarding the potential bullish pattern that we have on our hand. Well, it's not a potential bullish pattern. This is a bullish pattern, but there's only a 75% chance usually that we break to the upside. And with how the markets are behaving, I do think there is a good chance that we might drop below. But as I've been talking about November for the past week or so on this channel, I am expecting some sort of a relief rally towards November, just like we've seen the past couple of years. But this time around, we are in a bear market, so the move might not be as bullish as the past 2 years. But potentially we could even retest the swing low of the large fib retracement all the way up to 0.04761 cents. And that is potentially going to give you a very nice 155% trade. That is possible. Even in bear markets, you can make money. Look at Matic, look at Cosmos Atom. Those coins have doubled, tripled since the July-June bottom. So you just have to be smart about your investment. Now, jumping into the daily RSI here. As you can see, we dropped below the yellow support trend line here, and we're back testing it as resistance. So I wouldn't be taking any profits right now. I wouldn't be swing trading. The white trend line here is also very important to keep in mind because you did back test it twice. You had a couple of fake outs above it. You had another back test of resistance here in September. So if you break the yellow trend line, you just might run into the white one again, and that would present a nice swing trade opportunity for you. And the buy zone below from 36.6 to 32.09 is a buy zone that I'm eyeballing for entries because this has been a very important resistance zone for us that we broke above. We back tested it here in August, and now we're potentially looking for another back test into this yellow zone. We might dip our toes in here, and from there we might start recovering into November and breaking these major resistance diagonal multi-month, multi-week trend lines. So keep that in mind. And obviously the buy zone below here is obviously the oversold. So if you're going to be here at these levels, at these prices, you don't even need me to tell you that these are good buying opportunities, because not only the asset is very oversold, but also every time you are in these zones, you tend to have a very quick recovery to the upside. So this is basically easy money in the crypto market once you're in these zones. Okay, so let's switch over to the Binance chart. Switching over to the Binance chart, just a bit of a cleaner chart here. As you can see, we are on the daily, and the resistance zone above us from 0.04 cents all the way down to 0.03339 cents. That is a major resistance level that we back tested here in August. And if you look at the low that we printed in May, then you had a retracement to the upside, then you lost that low, you came back down, printed a lower low, and then you retested the previous low as resistance. So this right here is our new resistance level. And yeah, this is just how the markets work. And I've given you this in the last video, and actually I think I had this a couple of weeks ago before we got there, but I'm not sure. Either way, this is not too difficult to chart yourself. Just have this all on your charts. The next major resistance level would be over here, because that is where we ran into resistance after the little relief rally in May. And the price tag for that is at 0.05283. So that is another potential target for us in November. So let's say we do drop all the way down to the 0.01705 level. let's drop a Fibonacci retracement from that level, right? So this is a hypothetical, and we're going to drag it all the way to the August high here. And we're going to get a 1.618 target exactly at this resistance that we backtested in May. So there's more confluence in this area right now. You have the resistance and you have the Fib retracement telling you that if you break through this high in August above 0.03339, you might be looking at 0.05283. And why are you looking at that? Is because usually once you break through the high on a Fib retracement, you tend to retrace all the way up to the 1.618 at least. Your other level could be above here at 0.06842, but that is a bit too bullish. I try to manage my expectations on this channel and not be a hyper bull, right? And yeah, so that's pretty much everything that I wanted to show you guys. If we jump into the daily stochastic, as you can see, we are in the oversold, so great buying opportunities right now. As you can see, my stock length is set to 56 instead of the usual 14, just so I can get less false signals. The MACD obviously printed a bullish cross a couple of days ago, and we're seeing the effects of that right now. This is a lagging indicator, but you should still look at it because once you get these crosses, they tend to tell you the story and predict what the next move is going to be. So if you see a bearish cross, there is a good chance that you're going to continue in the downtrend in the coming days. So that is pretty much it, guys. I hope I explained everything well for you. Thank you all for watching. If I missed out anything important on the charts, please let me know down below in the comment section. Feel free to follow me on Twitter. Feel free to join my Patreon. I'm going to catch you in the next one. Bye-bye.